Hello, everybody. Welcome to another episode of Swing Trading TV. No, this is not episode 1. A lot of you guys are probably thinking, hey, I know that guy. It's from episode 1. This is not a replay. This is actually a new episode. And today we're going to be doing a trader Q&A session. I have gathered 4 questions coming from the people who, place these questions on swingtradingtv.com. So we're just going to go ahead and go through all the 4 questions. Just so you guys know, I have Brendan Egan back from episode 1. You probably remember him. It was the very first episode we've had here on the show. Brendan, welcome back.
Thanks, Mike. Glad to be back.
So the 4 questions, should we go ahead and start? Actually, you know what? Before we start, I'd like to say something to the people out there. Just so you guys know, an update, Swing Trading TV, we already have 1,200 subscribers or something like that, 1,200 plus. So the show is doing okay. It's been about 2.5 months now since we first started. 9 or 10 guests. And I think, we're getting really, good feedbacks from the audience. So thanks so much, guys. Also, I have this little underground project I'm working on. I think you guys are going to be very, very excited. Brendan, I mentioned before that I was working on a project, kind of like it's like a trading community, taking to the next level. Well, I started working on that. It's probably going to take about 2 months to build. I just spent $4,000, building that site. So it's going to be great. I think a lot of the traders are going to like it. So that's going to be coming soon. I just want to give you guys a heads up, about what I'm working on right now. But let's move on to the trader Q&A. All right, Brendan. So we have the first question here. As we've talked about earlier, these are going to be basic questions since this is like the very first, show on the Trader Q&A segment. We're probably just going to start off with the basic questions first, and then as we move along, moving forward, then we're probably just going to start, answering more complex questions.
Okay, sure.
Ready? All right. So the first question, basically, I didn't even include the people who, submitted the questions, but maybe next time I should. Maybe the next time we should have just the people call in. Maybe do like a live streaming or something like that.
Sure, we can do that also.
Yeah, I think it's better so people can ask questions real time while we're actually doing the show. All right, so first question, I guess it's for the both of us. How many technical indicators should I have up on my screen and why?
Okay. I don't know too much about your trading style, Mike, but to answer the question first with my style, I don't use any indicators. I just use price action and volume. So I guess if some people consider volume indicator, that's the only indicator that I look at.
I see.
Aside from that, all that I trade off of is just trends and support and resistance. So if you're a newer trader, I think that you need to learn how the market actually works before you add indicators to your trading. Something that most people don't really think about is kind of where indicators came from in the first place. The people that developed indicators were market veterans that had 20 or 30 years of experience, and they developed these indicators to supplement their trading, not to lead them into trades. So a lot of newer traders kind of turn to these indicators and use them the wrong way and end up losing money with them and give them a bad rap. So if you're a newer trader, and by newer I mean within your first handful of years of trading, I really don't think there's any place for indicators in your trading at all. I think you need to spend that time learning more about how the market actually works. What do you think about that, Mike?
Yeah, you know what? I do agree with that. And I think, with the internet, I mean, like if you just go ahead on Google and type in, how do I start stock trading? There'll be a lot of search results that's going to tell you, it's technical analysis. And, for the people, when you say technical analysis, it always involves technical indicators. Maybe for somebody who's been exposed to the markets 2 to 3 months, then that's when they kind of understand about your trading style, which is the price action,
Right.
But for me, I can't really stop people from using technical indicators, but if you ever do, try to limit your technical indicators at a minimum. Me personally, I use maybe 4. A lot of them are actually moving averages. I also use RSI, and I do check the price action also. I've seen traders, actually I've seen a lot of the traders' workstations, just like the one behind you there. They have like maybe 9 or 10 indicators. They have like 6, 7 moving averages, and when you look at their screen, it looks like, there's like spaghetti
Right, you can't even see the chart in the first place.
Yeah. I guess to answer that question is just don't get too obsessive with putting a lot of technical indicators. Yes, they're good. They can be a big help sometimes, but do not rely on technical indicators alone. Like I said, I have 4 technical indicators I'm using, but don't forget to learn, how the market is working. Make sure that if you are going to take a glance at the news every once in a while, make sure you check how the people are reacting to them. I've seen people just because, the RSI is below 20%, even if the market's tanking, they go long. You know what I mean?
Right.
Don't rely 100% on technical indicators. They are just tools you can use to help you identify the markets or the stock or whatever. But keep it at a minimum.
Right, exactly. And I mean, that all goes back again to where these indicators came from in the first place. I mean, these people that developed them already were trading for 20 or 30 years without them, and they said, hey, here's an indicator that I can develop to kind of take a shortcut with something. And they're not really using them to enter their trades. They're using them just to supplement their trading. So if you're going to supplement your trading with an indicator, then by all means go for it. If you're going to use it to try and call out your actual trades, then, just kind of give up right there because you're going to end up losing money. So just make sure you properly utilize any indicators that you are going to use.
And make sure you understand them before you use any of those.
Right, exactly, because each one kind of manipulates price a different way. So it's important to understand, what the actual formula is. Even though the computer does it all for you, it's important to understand, hey, a moving average is, the number of periods over the time frame, or, what exactly each indicator is calculating. Because most traders don't really understand that, and because of that, they kind of become dependent on that indicator. So
yes. Yeah, that's right. That's right. So, I hope that answers that question. We can go ahead and move on to question number 2. This question, I really like to spend a little bit more time because it's kind of serious. Question number 2 is it possible to get a loan to fund a stock trading account?
Okay. Yes, it is possible. Don't tell your loan officer that because he won't give you the money. It's actually kind of funny. When I started trading, I was right around like the $25,000 mark with my account size, and I actually gave some consideration into actually getting a loan to fund my account. And I'm really glad that I didn't do that. I went as far as going to the bank and getting rates and all that, and I decided not to do it. It's something that I personally suggest that you never do. You should always be trading with money that you can afford to lose. And in my opinion, if you're taking out a loan, you definitely can't afford to lose that money. So
exactly.